Hello, everyone.
Hey.
Welcome back to Green Tea Investments. Today, let's talk about a very interesting company from one of India's most respected business houses. I'm talking about Tata Investment Corporation Ltd, or TICL. Now, you might be familiar with big names like TCS, Tata Motors, or Tata Steel. But TICL is a little different. It's not a company that makes cars or software. Instead, it is a non-banking financial company that primarily invests in other companies. Think of it as a basket that holds shares of many other strong businesses. This makes it a very special and powerful entity within the massive Tata Group, offering a unique way for us to invest in the broader success of the Indian market through a single, well-managed stock. So why are we discussing Tata Investment Corporation today? Because something very exciting has happened recently, a stock split. This event has made the company's shares more affordable for retail investors like you and me. It opens up a new door of opportunity. The big question is, does a lower price automatically make it a good buy? Tata Investment Corporation has a history that is almost as old as independent India itself. The company was founded way back in 1937, originally under the name the Investment Corporation of India. Imagine that! It was established with the objective of providing a way for investors to participate in the industrial growth of the country. At that time, the Indian stock market was very young, and this company played a pioneering role. A major milestone in its journey came in 1959, when it became a subsidiary of Tata Sons Private Limited, the primary holding company of the Tata Group. This was the moment it truly became a Tata company, aligning its investment philosophy with the broader goals and ethics of the Tata brand. This integration gave it unparalleled access to the group's resources, management expertise, and strategic insights. TICL has consistently invested in a diversified portfolio, including listed and unlisted securities from industries such as automobiles, banking, cement, chemicals, and information technology. This diversification helps to reduce risk. Another significant aspect is its registration with the RBI as a non-banking financial company. This regulatory oversight ensures strict financial norms and transparency standards, adding another layer of trust for investors. When we invest in a company, we are not just buying a piece of its business. We are also placing our trust in the people who run it. That's why understanding the ownership structure is extremely important. In the case of Tata Investment Corporation, the ownership is very clear and concentrated. The majority of the company is controlled by the promoters, which are entities belonging to the Tata Group. As of the latest data, Tata Sons Private Limited is the primary promoter of TICL, along with other Tata-affiliated companies and trusts. The promoter group holds a substantial stake, often in the range of 70 to 75%. This high promoter holding ensures stable strategic decisions and alignment with the long-term vision of the Tata Group. The remaining shares are held by institutional and retail investors. This includes domestic institutional investors like mutual funds and insurance companies, as well as foreign institutional investors. And of course, retail investors like you and me. This ownership structure provides stability and accountability. The strong promoter backing ensures the highest standards of corporate governance that the Tata name is famous for. Now let's get to the most exciting recent development, the stock split. Many of you might have seen the news and wondered what it really means. Let's break it down in simple terms. A stock split is a corporate action where a company divides its existing shares into multiple new shares. Imagine you have a 1,000 rupee note. A stock split is like exchanging it for 10 100 rupee notes. The total value remains the same, but now it's easier to transact with. Tata Investment Corporation announced a stock split in the ratio of 1:10. This means that for every 1 share an investor held, they received 10 shares. Let's use an example. Suppose before the split, the stock was trading at 7,000 rupees per share. If you owned 1 share, your investment value was 7,000 rupees. After the split, you would have 10 shares at approximately 700 rupees each. So, why did the company decide to do this? The primary reason was the high market price of the share. Before the split, the price had run up significantly, making it difficult for small retail investors to buy even a single share. By splitting the stock, the company has lowered the ticket price, making it more accessible to a wider base of potential investors. This increases the number of shareholders and improves trading liquidity. The stock split has created a very interesting entry point for investors. TICL is a fantastic vehicle for diversification. When you buy 1 share of TICL, you are indirectly investing in top-tier companies like TCS, Tata Consumer Products, Tata Steel, and Titan, among others. This is like buying a mutual fund, but in the form of a single stock. For investors who find it difficult to research individual stocks, TICL offers a professionally managed portfolio of high-quality assets. My confidence comes from 3 main pillars. First, the Tata brand itself, synonymous with trust, ethics, and good governance. Second, the company's core business of investing in a diversified portfolio provides inherent protection against market volatility. In conclusion, Tata Investment Corporation represents a unique investment opportunity, especially after its stock split. Thank you for watching. If you found this helpful, please like and subscribe for more investment insights. Remember to do your own research and consult with financial advisors before making investment decisions.